dissecting listings, exploring financing options, and unraveling the mortgage mysteries that could shape your financial future. Stay tuned as we embark on an exhilarating journey through the world of real estate and mortgages. Ladies and gentlemen, fight fans, and real estate enthusiasts alike, welcome to a YouTube live stream that will leave you on the edge of your seat with excitement and financial enlightenment. This is my Mortgage Hound, the show where we sink our teeth into the world of real estate listings, mortgage financing options, and everything you need to know to conquer the housing market. Prepare to witness an electrifying fusion of real estate expertise and mortgage mastery as Cody unleashes his knowledge, dissecting new listings and providing insightful breakdowns of the most lucrative mortgage financing options available. Whether you're a seasoned investor or a first-time home buyer, this live stream promises to arm you with the vital information needed to make informed decisions in today's dynamic market. But that's not all. My Mortgage Hound is more than just a review show. We'll also keep our fingers on the pulse of the mortgage world, delivering the freshest mortgage news and unveiling the latest market statistics that could make or break your financial aspirations. From interest rates to refinancing trends, we've got you covered. So, lock in your attention and get ready to be educated, entertained, and empowered with my Mortgage Hound live stream. Join Cody and me, Bruce Buffer, as we unleash a powerhouse of knowledge, dissecting listings, exploring financing options, and unraveling the mortgage mysteries that could shape your financial future. Stay tuned as we embark on an exhilarating journey through the world of real estate and mortgages. Ladies and gentlemen, fight fans, and real estate enthusiasts alike, welcome to a YouTube live stream that will leave you on the edge of your seat with excitement and financial enlightenment. This is my Mortgage Hound, the show where we sink our teeth into the world of real estate listings, mortgage financing options, and everything you need to know to conquer the housing market. Prepare to witness an electrifying fusion of real estate expertise and mortgage mastery as Cody unleashes his knowledge, dissecting new listings and providing insightful breakdowns of the most lucrative mortgage financing options available. Whether you're a seasoned investor or a first-time home buyer, this live stream promises to arm you with the vital information needed to make informed decisions in today's dynamic market. But that's not all.
All right. Good afternoon, good evening, and good morning, depending on where you're at. This is our first live stream. Much anticipation on my end, getting everything working this morning. It's been an all-day project learning how to stream to YouTube, but I think we got it figured out. Hopefully you guys heard Bruce. Sometimes the audio was working, sometimes it wasn't. But yeah, this is our first stream. So when I was a kid, my family, we would go on vacations to the beach, and on the weekends, on Saturday or Sunday morning on PBS, there would be a slideshow show of all new listings with the real estate agent information, with pictures of the homes, and we'll just go through a slideshow of all the listings. And I really liked watching that. I watched it with my parents for years, and kind of went away. So that kind of inspired me to bring it back in a different form. Live streaming is the new hot thing. I watch a lot of live streams on my different hobbies. So I thought I'd give this a shot. So today we're going to do a few different things. We're going to look at some mortgage news. I got some cool AI stuff that's happening in mortgages. If you guys have been watching any of my social media posts in the last few weeks, I've been playing a lot with AI, with creating avatars and funny characters like Mr. Bruce Buffer, who gave us a nice introduction. So we're going to go over some of that type of AI, how's it affecting guidelines, where are things going. There's some pretty cool announcements that have been made. We're going to go over some statistics locally here in Clark County. I know this broadcast goes out to everybody in the world. We're going to start by focusing on some homes in Clark County. But as this live stream grows, I'd like to do listings outside of our area in Portland. I'm in Portland, Vancouver Metro. So if you guys aren't familiar with that and where that is at, we're at the southwest end of Washington, just across the Columbia River from Portland. We spend a lot of time out the coast too, so I'd love to feature some homes from there. In fact, I just got off the phone with the agent out there that's going to be doing a listing we're going to hopefully have in the next week or two. So that's it. So let's go ahead and rock and roll. We don't have anybody in the room to chat with yet, but you can chat in there. As we go over interest rates, let me just switch screens here. Interest rates are all over the place. I think anybody that has any interest in watching this stream knows that over the last 8 weeks, interest rates have been up and down almost 0.75%. So to even the playing field, everyone has different interest rates. Everyone has different adjustments to their rate depending on the credit score and their situation. We're going to be using this website, Mortgage News Daily. This is where I kind of go to get all my current information on a daily basis of what's going on with interest rates. So these are national averages as of today. And you can see here 15-year fixed at 6.38, 30-year jumbo fixed at 6.92. Kind of shows you a chart of where rates have been over the last few years. It's important to note that interest rates on this website have no points built in. We're going to be going over points in a lot of our breakdowns. But this is a good way to gauge the market, where interest rates at today. Your interest rate may vary, but these are the rates we're going to be using. I put a link in the description. I'm still working on figuring out how to get the links to work in the description. Hopefully I can get that fixed so you can come back to this video and those links will be there. But yeah, so that's interest rates. The big news this week, thanks to our head underwriter who kind of rolled it out to us on Monday, is we're seeing AI enter our industry. And a lot of it is very, very positive news. It enhances a lot of the guidelines, opens up a lot of the guidelines, and brings, believe it or not, AI does have common sense and brings a lot of common sense into a transaction. So we recently had a deal where we had first-time home buyers, married couple. One had a credit score, one did not. The borrower that had the credit score earned more than 50% of their combined income. So we were able to proceed with that loan even though the co-borrower did not have any credit scores. And that got me thinking, there's been a lot of people over the last 20 years that I've had to go put a plan together to go establish credit, or if they don't have the ability to go out and establish credit quickly, we could do what's called a manual underwrite, and we can use things like cell phone bills and utilities to kind of establish a non-traditional credit. Well, Fannie Mae has rolled out the ability to upload 12 months worth of bank statements. And then Fannie uses their AI to analyze the spending habits of a borrower that does not have credit scores, to analyze their spending habits and determine their responsibility level and their ability to repay the loan. And based off of that, if they meet the income requirements and everything for this specific program, then they get to proceed forward as if they had a credit score. So I'll get some more information and be able to share that next time. But that is one of the big announcements for me this week. So my buddy Gavin Huckins over at Berkshire Hathaway, every Tuesday he shares this with me. And I'll put his information in the description. I don't think it's in there now, but I'll add it in before the end of the stream. And I'll be sharing this every week too. This is a market snapshot here locally in Clark County, but this should be a common trend in different counties across the country. New listings this week, this is for last week. So there's 186 new listings last week. That was down 17% from the week prior, which isn't too surprising this time of year. We're right in the peak of buying season, but we're also right in the peak of vacation season. Summers, we're at that midway point, vacations. A lot of the people that needed to list their home to relocate before the school starts in September did that in April, May, June. But that number is down 17%. Pending sales, so these are listings that have gone pending but have not closed yet, 209, down 7%. So still more pending sales than new listings, so that's kind of going the wrong direction for us. And then last week we had 145 units sold. That's down 27%. So this kind of paints a picture of, even though interest rates are up, we still have an inventory issue. And until inventory starts to level out and we get more homes on the market, and we shift from such a strong seller's market to more of a neutral or buyer's market, we're still going to see good, steady appreciation of values, not to be mistaken with the appreciation we saw in 20 and 21, but still from a home ownership standpoint, pretty good appreciation. All right. Hopefully, in future segments, this takes a long time because you guys are all chatting questions. Okay, so I have two listings that I want to feature this week. One's a new listing, and one is a listing that's been on the market a little bit, but just had a good price reduction. And what I want to do is just kind of show you what I go through with my clients when they schedule a consultation with me. So once somebody has applied and I've reviewed all their information, we schedule a 30-minute phone call where we go through all their options start to finish. We go over all the vocabulary. We break down what a mortgage looks like, and then we come back and play with that. We use a really cool screen sharing tool so that we can do this over the phone. Makes it really easy. And it also gives us a visual to go along with all of our future conversations. So for everybody that's watching this, they're going to kind of get to see that. Instead of a one-on-one level, we're going to do it on the internet and do a live stream showing you kind of a breakdown. So our first listing today was sent to us by Diana Rutherford. Been working with Diana Rutherford for a few years. She's becoming one of the best agents here in Clark County. And she sent this one to me, 1918 Northeast 67th Street. Now we're using Zillow. Zillow is obviously the most popular, but I'm working on a better version of this that we'll be using in future live streams. But for today, we're going to use good old-fashioned Zillow. $520,000. This is kind of in that first-time home buyer, move-down buyer range, kind of where we're not in the low 400s, so you're able to get a little more for your a little more of a house. But this is still kind of in that first time. I'm seeing a lot of first timers in this price range. So it looks like a nice one level. I'll go through some of these pictures here. Now, I'm not a real estate agent, so I might point things out that a real estate agent may or may not. I may overlook some things, and hopefully someday the Diana, whoever's listing these homes, are on the chat and they can share with us. Nice one level. Vaulted ceilings. Nice kitchen. Not an open floor plan. A lot of people are kind of looking for more of that old style now. It's starting to come back. Slab granite. Now, this would be a showstopper for my wife. The dishwasher is not the same color as the microwave and oven. Let's see what the refrigerator. See if we get a shot of the refrigerator here. Nope. Looks like a covered patio. That looks like a wood-burning fireplace. Looks like it's been freshened up. I wouldn't call this a remodel, but it looks like fresh carpet, fresh paint, move-in ready. Looks like tile. Is it tile or is that linoleum? That is a wood-burning fireplace. Very nice. Nice backyard, fenced. Good landscaping. So overall, a pretty nice home. $520,000. Let's dive a little bit deeper in here. I love reading what the listing agent writes. Beautiful home boasts 3 bedrooms, 2 baths, making it perfect for families or anyone who desires extra space. Situated on a large corner lot, key. The property offers ample outdoor space for relaxation and entertainment. The interior of the home features an open and inviting floor plan, allowing for easy flow between the living room, kitchen, and dining area. The bedrooms offer plenty of natural light and comfortable living space. With its convenient location and charming features, this home is sure to impress and provide a comfortable living experience. Looks like there is an open house. Of course, there's an open house. Diana, for those of you who don't know, is the open house queen. Looks like this Saturday and Sunday from 12 to 2, both days. Let's take a look at the location here. Next to Hazeldale Park off of 68th. Kind of in the Orchards area. Okay, listed for $520 last week. Sold in 2017 for $327. Property tax at $45.88, assessed in 2022. All right. So what you guys are looking at on your screen is called a total cost analysis. When I create one of these for an individual, it's live. So anytime I make a change on my end, it shows up live on their end. If I highlight, it highlights on their end. That way we can really dive in and massage the numbers to kind of see what they're looking to do. And then as you guys are out shopping, you can send me an address. I come in here and update this to match a specific property. So what I'd like to do now, just kind of walk through this line by line, show you guys how this reads, show you the vocabulary, and then if anybody has any questions, they can put it in the chat. We don't have anybody in here yet, but soon, just wait. Okay. So in this first column here, I put together a FHA 30-year fix. FHA is a great option for first-time home buyers. It's not their only option, and it's not specifically for first-time home buyers, but it really is a good vehicle for people that are starting early in their careers, that have higher debt-to-income ratios, lower credit scores, student loans, somebody that's a first-time home buyer, somebody that's not selling a home and coming in with 30-40% down. So here you can see our purchase price, $520,000. FHA requires 3.5% down. That brings our loan amount to $510,000. I'll explain why that math doesn't add up here on the next screen. Interest rate, 6.62. So let's go back here. And I'm pulling that again right off of Mortgage News Daily. And we go down to FHA 30-year fix, 6.62%. And notice that rates have improved a little bit this week, which is good. Okay. So there you see the 6.62% interest rate. I'm going to go up here above where it says either you're fixed, and I'm going to click on the more info link. That's going to bring us to this payment breakdown screen. Again, here we see our purchase price of $520,000 with 3.5% down at 6.62. Our principal and interest payment is $32.67. Property taxes, we saw that on the Zillow screen, are at $380 a month. Homeowners insurance is going to vary depending on which company you go with. We definitely have our insurance agents that we like to recommend. Hopefully they'll be on the call one day on this live stream. So it's going to depend on what insurance company you elect, but also what coverages you elect to have. On a home like this, you can expect anywhere from $50 on the low end to $100 on the high end. We're going to use $75 today. Mortgage insurance. This is a big one. I have a feeling we're going to be spending a lot of time on these streams talking about mortgage insurance. Mortgage insurance does nothing for you. Where's the camera? Does nothing for you other than allows you to put less than 20% down. It's also referred to as PMI, mortgage insurance, MI. What mortgage insurance does is, let's say we have a homeowner that has a home with a mortgage with mortgage insurance, and they default on that loan and they stop making their payments, they go into foreclosure. The mortgage insurance company reimburses the lender a percentage of the balance. Not the homeowner, the lender percentage. They reimburse the lender a percentage of the balance of the loan. What that does is it lowers the risk to a borrower, to a lender, to lend to somebody with less collateral, allowing them to lend to somebody with only 3.5% down, or 5% down, or 15% down. And we'll dive into what the different percentages do to the mortgage insurance on different programs. FHA with 3.5% down, the monthly premium is 0.5% of the loan amount divided by 12. So we get $208 here. That mortgage insurance is on there for the life of the loan. The only way to get rid of the mortgage insurance with FHA, this is not true with other programs, but with FHA, is to either refinance or sell the property. FHA has two forms of mortgage insurance. We're going to go over the second on the next screen. So if I add these four payments together, I get a total payment of $3,930 a month. This is where I would normally ask the borrower on the other end of the phone, how does this number sit with you? And what I want to hear when I ask that question, and you guys can think about this in your heads, is how does that number sit with me? Is it, holy shnikes, that's way too high, there's no way I can afford that? Is that, it's pretty much what I was thinking? Or is that, oh, that sounds great, that's under my budget? Those are normally the three answers I get. And based off of that, based off of their reaction and how that number sits with them, we can kind of start to figure out, is this the best program? Should we be looking at others? What's going to make the most sense for this borrower? Because often, when you apply for a loan, your pre-approval amount is much greater than your budget amount. And so just because I know somebody's approved for a $5,000 payment doesn't necessarily mean that a $3,900 payment excites them. So we want to know that too. Okay, moving on to the next screen. We're going to come back on these other programs here in a minute. But moving on to the next screen. Closing costs, 3.5% of $520,000 gives you a down payment of $18,200. Loan to value ratio, so this is your new loan balance against the purchase price or appraised value. We're at 98.19. But wait, I said we're putting 3.5% down. I'll explain that here as we move on. Closing costs. Average closing costs are going to be around $36.91. That number is going to vary depending on which lender you're talking to. I put very generic numbers in here. Basically, what that $36.91 breaks down to is three items. The first is your title and escrow fees. And that's the majority of that. So the escrow fees are the fees the escrow company charges to handle as a third party to handle all the paperwork, all the signings. Your title insurance is there to make sure that there's no liens against the property that nobody knows about. Maybe a previous owner never paid a roofer and they put a lien against the house. And now when they sell that house, that's now your lien. So the title insurance is there to ensure there's no liens against the property. So there you go. So the title and escrow fees, that's the majority of that. You have your county recording fees. And you also have our fee or a lender fee. We charge just a flat $14.50. Lenders charge different amounts. It's common to see an admin fee. It's common to see, which we charge. It's common to see underwriting fees. It's also very common to see a 1% origination fee. Now, we don't charge that, but that is common to see in there. And all that comes into play with interest rates and what people are offering. But for today, we're going to go over what we offer, and that's just the $14.50 admin fee, no 1%, no junk fees. I'm going to save points for now. We have a lot of examples to go over, but points are used to buy down the interest rates, about the cost of the interest rate. Since we're using Mortgage News Daily's interest rates and they don't have any points built in, we're leaving the points out for now. This number, big number, $8,781. So on the previous screen, I showed that there are two forms of mortgage insurance with FHA, the monthly amount. They also charge a one-time upfront funding fee. And that's 1.75% of the loan amount. That fee does not get paid out of pocket. It gets financed into the loan, which is why if we're putting 3.5% down, our loan to value ratio should read 96.5. Instead, it reads 98.19 because we're adding in that $8,700. Prepaid taxes, insurance, and interest. This covers three items. The first is your prorated interest for the month we close in. So if we were closing on August 15th, for example, there'd be 15 days remaining in the month. We collect those 15 days up front. And then your first payment would not be due until October 1st. You would skip September. Asterisk next to skip. You don't get any free time in the house. When you make your mortgage payments are always paid for in the rear. So when you make your September 1st payment, that covers all of August. When you make your October 1st payment, that covers all September. The 15 days we collect up front cover the rest of August. So even though it feels like you skipped a payment, you don't get any free time in the house. But that does make it nice if you're leaving a lease or something like that. The second item is your first year of homeowners insurance premium. We're going to collect that up front. We're going to pay that to the insurance company you chose to use. And then the third item is we're going to collect X amount of months worth of property taxes and homeowners insurance, and we're going to deposit that money into an escrow impound account. Then every month when you make your payment, the property tax portion and the homeowners insurance portion will be added to that account so that you have enough funds in that account to cover your property tax bill when they're due here in Clark County, April and October, and your insurance every 12 months. And we'll include a 2-month cushion in that to make sure that there's always enough funds in that account. So if we add these three numbers together, your down payment, your closing costs, and your prepaid items, taxes and interest, you get a total out-of-pocket expense of $26,891. So this is what I would normally ask. How does that number sit with you? Is it more than you expected? Less than you expected? Let's say it's more than I expected. Well, there is this contribution item here. And I'm not saying that this is going to happen on this specific house. I don't know the situation. But as we are seeing the market cool down with rates going up and COVID being over, we are seeing the opportunity for buyers to ask sellers to pay some of their closing costs. So if we, for example, ask for $6,891 in closing costs paid for by the seller here, that would lower your cash to close to $20,000. So I skipped some things there, but that gives you a good overall understanding of what an FHA mortgage looks like on this house. There's your payment, there's your cash to close. There's a formula I like to use. For every $10,000 in purchase price or loan amount, it's going to affect your payment roughly $60 a month. Okay. So it's not an exact formula, but it's a good rough formula for doing quick estimations on payment. So if we wanted to offer $530 because we know there's another offer coming in on this house, we can roughly quickly in our head calculate that our payment will go from $39.30 up $60 to $39.90. That formula also works in reverse. So for every $60 a month in payment, that equates to roughly $10,000 in borrowing power. So for example, if the price on this home was $530, but the property taxes here were $60 less a month, your payment would be the same. Another way to look at this is $208 a month in mortgage insurance. That's pushing us somewhere in that $40,000 to $50,000 worth of buying power. Meaning if we did not have to pay mortgage insurance, then we could go out and find a house for $560, $570, and our payment's roughly going to be the same. But if you need FHA for whatever reason, lower credit score, student loans, 3.5% is your max, then there's nothing wrong with having mortgage insurance. But just know that it is taking away a little bit of your buying power, which is why I really like our next option. Okay. So we're moving a little bit away from your typical first-time home buyer. It may be a move-up buyer, maybe a borrower that's been saving for a while and has a little bit more to put down. And then we're looking at 5%. Before I do that, I want to go back. That formula is really handy for a lot of reasons. Okay. What I really like using this formula too, I use it personally this way, and I advise my clients to too, is it's a good way to analyze your consumer debt. If you have a $600 BMW payment, that's equivalent to borrowing $100,000 in mortgage. Now, that doesn't mean that if you have a $600 BMW payment, you're not going to qualify for a mortgage. But it is a good way to analyze your debt, analyze your spending habits, and understand where you're doing if you are preparing to buy your first house, or even if you're preparing to buy your second or third house. Okay, 5% down, conforming. So purchase price, same, $520,000. Go back to the screen. We're putting 5% down instead of 3.5, which makes our loan amount $494,000. Conforming rates, yes, are a little bit higher than FHA. If we go back here to our Mortgage News Daily, we can see our 30-year fixed rate right at the top, 6.96. So you do get a little bit of break on your rate because there's mortgage insurance there that offsets that risk. Okay, let's go back. If we go to our payment screen, see property taxes, everything the same, except boom, no mortgage insurance. But Cody, you said if we put less than 20% down, we have to have mortgage insurance. It's very true, and there is mortgage insurance on here. There are several ways to handle mortgage insurance. And not to promote myself, but not everybody understands that there are multiple ways. I'm not saying this is the best way in this situation, but I thought it was a cool thing to show. So no mortgage insurance, I'll explain that here on our closing cost screen. There's our down payment. You can see our loan to value ratio is now 95% because we're not financing in any upfront mortgage insurance. Closing costs stay the same. Boom. Upfront mortgage insurance. So instead of paying this out in a monthly amount, we're going to buy the policy out in one lump sum. In this example, $6,422. Your lender can shop for mortgage insurance for you, though they're not a set rate. So we have a handful of companies we work with, so I'll go and find the best quote. For this example, we're going to use 6422. That's not financed in, so you are paying that out of pocket. Okay, but if we go back and we look at the payment, $208 a month, we just do some quick math. $6,422 divided by 200. $208 gives us 30 months. So that tells us that after 30 months, we will have recouped that 6422 as opposed to paying the FHA mortgage insurance. So if we're going to keep this house or the loan longer than 3 years, we're coming out ahead. Really coming out ahead in years 5, 6, 7. Now, are rates trending down? That's what everyone thinks is going to happen. We don't know. The markets think rates are going to come down. So if you refinanced, maybe this wasn't the best move, but I think putting yourself in a position where you have a payment that you're going to be really comfortable with might help you step up your purchase price a little bit, get into a better house. So prepaid items would be the same. So now we're bringing in a lot more money. FHA, we're bringing in a little under $27,000. We're bringing in $41,113 here. But again, we can always ask the seller to pay some of our closing costs for us. We could ask them to buy out our mortgage insurance, bringing that number down. So if we go back to our main screen, we can compare the two. We're saving $202 a month. Payment $37.28. Cash flow is $41,000. I want to show you something really quick. If we go in here, I'm going to increase our purchase price to $500,000. Let's go $560,000. Leave everything else the same. Now our payment is $50 more a month than FHA, and we're buying a $560,000 house instead of a $520,000 house. So if you have the ability to do that, if you have the credit and you have the larger down payment, this is a great way to achieve your budget, pull only 5% down, and get into that house you thought might be a little out of range. So I'm going to move that back to $520,000 just to keep everything the same. Okay. The other option I put together on this house is a VA for all of our veterans out there. VA mortgages are a great way to go. If I had to do it over again, I'd do what my dad did and I'd go enlist just for this benefit alone. I mean, it's awesome. There's nothing else like it. Same house, $520,000. Zero down. For the same reason FHA's loan amount was higher than it should have been. Same with VA, and I'll explain that on the next screen. But we're doing zero down. 6.20. We go over to our Mortgage News Daily. 30-year VA, 6.62. Principal and interest, $34.04. Taxes are the same, insurance is the same. No mortgage insurance. No mortgage insurance at all on no monthly mortgage insurance at all on VA. Total payment, $38.59. Closing costs, everything's the same except for this. The VA does charge an upfront fee for doing the loan. If it's your first house, it's I think 2.3. If it's your second or third home, it gets more expensive. If you are a disabled vet, you probably already know this, but if you are a disabled vet, this gets waived completely. So there truly is no mortgage insurance. Hey, Brian, Details Home Inspection. Good to see you. So yeah, if you're disabled, that gets waived altogether. I'm going to leave it in here for now. With that tool I told you about earlier, since we're financing in $11,000, almost $12,000, that is affecting your payment. You know, that $60,000 or $60 a month. So let me see. Okay. So if we add all those numbers together, our only out of pocket expense is our closing costs and prepaid items. So if we were to ask the seller to contribute $86.91, we'd be buying this house with $0. Thank you for your service. So there's three options on that. Let's see if we get caught up on chat here. Let's take a look. Let's see. Thanks, Brian. I've had this idea for doing this stream since February, and then I sat on it, and then AI started taking off, ChatGPT, and I really kind of saw where our industry was going, and I thought now's the time to do it, to do this live and speak to a larger audience, help more homeowners start to get excited about the new listings that are coming out in their market, and also start to gain an understanding without having to contact me and go through all that, which is really not that big of a deal. But at least it gets them excited and gets them thinking and exploring what's available. So Brian really pushed me to do this live stream, so thanks, Brian. Details Home Inspection, the market shareholder for Clark County, and I believe Multnomah County too, for home inspections. What's the requirement for paying the PMI all at the beginning? Well, you have to qualify for that loan. Okay. So what determines your mortgage insurance, the cost of your mortgage insurance, other than FHA loans, is your credit score, your debt to income ratio, are you a first time home buyer? Those type of things all impact your mortgage insurance. If you choose to do what's called a single premium, like I showed you, where we're paying it all in one lump sum, there's really no requirements other than you have to tell your loan officer that's what you want to do. It is awesome for getting a monthly payment down, especially in this market, because everybody that's watching this knows the difference between a $450,000 home and a $510,000 home is gigantic right now. And so if you're at the top end of your budget and you need to squeeze a little bit out to get into a nicer home or a bigger home or a better neighborhood, it's a great tool to do that. All right, caught up on chat. Okay, we ready for our second home? Boom. Jonathan Romano sent me this today. He's had this listing. Let's just skip ahead and see how long he's had this listing. Well, this says it was listed for sale yesterday. Looks like it was listed in June. If he was on here, he could help us out. So if you see Jonathan, say shame on you for not being on Cody's live stream. But it looks like they took it off the market and then did a price reduction. Looks like it was on the market in May. So not sure what's going on there. Jonathan, his contact information is in the description. So call him. He can tell you all about that. But look at this home, 1.369. So now we are no longer in the first time home buyer realm. That's beautiful. This is out in Washougal. Wow. I bet you the dishwasher matches the rest of the other appliances. Now this is really interesting, this new style where they're putting these, I think they're faux beams. I don't think those are real beams. Brian would be able to tell me. Hi, Gavin. I'll answer your question here in a minute, Gavin. Man, look at that view out those windows. It's like you're in a treehouse. Cool double sinks that are not attached. That's cool. Little bar area. That table would have to go. We'd have to put in a pool table. Oh, there's another fireplace there. Looks like a bonus room. Oh, check that out. They got one of those golf simulators. So the first thing I would do is negotiate the golf simulator stays. Is that in a loft? Or is that in a crawl space? That looks like a crawl space. What do you think about that, Brian? A bonus room. Office. Check out that view. Little fire pit. Nice deck. Partially covered. Sweet. Oh yeah, you can see how big their crawl space is down there. Okay. More pictures, but that's enough. Property taxes assessed in 2022 for $11,000. Yeah, pretty nice. If we look where it's at in Washougal, not too far from the highway, not too far from the river. And that home looks priced right. Jonathan's really good about pricing his homes right at market value, especially in that price range. I know he kind of specializes in those higher end listings. Okay, jumbo time. Many of you may be asking, I don't know. Oh, hold on. Before we do that, Gavin had a question. We'll dive into points a little bit on this one. That's a really good question, and it's a long answer. I think the typical misconception on points is that for every point I pay, I save 0.5%. Or if I pay a point in points, I'm saving a point in interest rate. It's really not that way. I'll do a quick explanation. Interest rates don't change on a daily basis. The cost of interest rates do. And when that cost changes significantly, that's when you start seeing lenders change the rates they're offering. And that cost is referred to as points. If we go back here. So if all of a sudden we see a big change in the mortgage-backed security market, which is the market mortgages trade on in the secondary market, if we see a big swing in supply and demand up or down, those points will go up and down. So even though we're looking at, let's say we have we're quoting an interest rate of 6.5% and points go up a little bit, doesn't mean the interest rate necessarily goes up, but the cost of that interest rate may be a little bit more expensive. So instead of paying 1/4 point like you were yesterday, maybe rates ticked up a little bit and you're paying 0.5 point, but you're still getting the same interest rate. When that shifts a significant amount, whether over a couple days or a couple weeks or a period of months, that's when you see rates really start to tick up. But yes, concessions can be used to buy down the interest rate. And we'll if we don't explore that today, we'll definitely dive into it on next week's stream. Maybe we'll put 3 or 4 scenarios together with rates and show an actual rate sheet and all that. So hopefully that helps answer your question, Gavin. We will be diving into that a lot as we go on with this live stream. jumbo loans. So a non-jumbo or a conforming loan is a loan that meets Fannie Mae or Freddie Mac's guidelines. And every year they set what their maximum loan amount they'll lend is. For 2023, in our area, kind of nationwide, depending on unless you're in a super high value market like LA or something, where we're at, the conforming loan limit is $726,200. And if you want to know more about that, I just went to loanlimits.org. There's lots of websites. This one's pretty good for verifying what conforming loan limits are. FHA has loan limits as well that are not the same as this. But in this example, we're at 526. Excuse me, 726. So we are going to be over that, which puts us in the jumbo realm. Now, don't be scared of jumbo loans. Especially right now, the difference in rates between a jumbo and a conforming is very marginal. Now, if we look at a jumbo loan, it's actually a hair better than a conforming loan. That wasn't the case a couple years ago. So today, 30-year fixed jumbo loan, 6.92 on a 30-year fixed. So don't be scared of jumbo loans. There's no reason to be. Okay. And for those of you who didn't see that, the address for this home, 32900 Southeast Eagle Woods Drive. So our purchase price, $1,369,900. I did 25% down in this scenario. Yes, you can do less. You can do 20% down. There may even still be some 10%. I don't think so. But there might be some weird broker programs out there to do 10%. But generally speaking, we're talking 20. The pricing's better at 25. So we're going to use 25 in this example. I'm not going to show you 4 examples like I did last time. A loan amount with 25% down is $1,027,425. See that interest rate we just saw in the Mortgage News Daily, 6.92. Click on the more info link. There's our purchase price, principal and interest, $6,780. That's where you're at that interest rate. Property taxes we looked up. We are at $917 a month. Homeowners insurance, I went on the higher side this time. $100 a month should be close to where you'd be on that property, maybe a little bit more. Don't have to deal with mortgage insurance. Total payment, $7,797. Closing costs, 25% down. It's $342,000. That's represented with right here, 75%. Closing costs really aren't going to change, especially with us. We don't charge a 1% origination fee, so the costs aren't going to change that much. The title and escrow fees might be a little bit higher, or will be a little bit higher. But I still think, somewhere between $3,000 and $5,000 is where you're going to lie. We're not taking this too incredibly serious today. Prepaids on that house, I bumped it up to $6,000. Should be close to cover what we need for property taxes, insurance, interest, all that. So out of pocket, we're at $352,166. So it really shows you kind of a spread between, this might be your second or third move up home. Let's say you're sitting here going, hey, I want to see what $500,000 looks like. Well, it's easy math, right? You use that same formula I gave you, but just for fun, let's see what a larger down payment would be like. Let's say you bought a house in 2018. It's skyrocketed in value. You want to sell it, move into this little McMansion. So instead of 25,000, 25%, we're just going to do a flat $500,000 down. That might improve your interest rate a little bit too, but for today's example, I'm just going to leave it alone. So you can see here, the loan amount dropped to $869, close to the conforming loan limit. Total payment with tax and insurance, you save $1,000, $1,040, down to $67.57. So there you go. I made it an hour standing here talking to myself, except for Gavin and Brian. Thanks for joining me today. This was fun. It was easier than I thought it was going to be to do. I'm excited to do this on a weekly basis. I'm going to be hopefully bringing you some cool listings. Like I said, I just got the phone with an agent that's going to be taking a listing in Long Beach, Washington, which is my favorite beach. And so if you guys see any homes you want to take a look at, feel free to put those in the comments on the YouTube page, and I can look those up for next week. Yeah. Trying to think if there's anything else I want to cover. Yeah, I'm hoping to make this a little bit longer next time, maybe have 3 or 4 properties. But I really want to make this just a fun place for people to look at homes and see what they can do. If you want to get a hold of me and have a private one-on-one conversation, there's a link in the description to schedule a 15-minute phone call with me. You can always go to my website, which is in the description. It's also easy. It's just loansbycody.com. You can fill out an application and we can get the ball rolling and we can schedule a call just like this. So Gavin and Brian, thanks for pushing me to do this. I'm really glad I did. So, all right, everybody, have a great week. I'm around if you need me, and we'll see you next Thursday. Somebody show me how to turn it off. Bye, everybody.